Hey everybody, it's Monday, November 10th, and we had a nice bounce up in the market today. Government shutdown supposedly about to end. I don't know if it's a done deal yet, but that's what most of the news coverage is saying. So I think that was part of the reason for the bounce, but also because, like I said on Friday, and I went over the numbers, in putting together my report over the weekend, the fiscal flows, they're stable. They're not really deteriorating, although I did just look at Friday's daily treasury statement and, the data, today's daily treasury statement, which is Friday's data. And we are seeing leading flows. They're starting to dip back down again. They're still up like 8.6 billion over last year. But last week they were up like 24 billion. So it looks like the government shutdown is ending just in time because those leading flows probably are about to drop negative year over year again. Net flows, they're just going to stay negative because of the tariffs. So that's just a condition we're going to have to deal with. Right now, the tariffs are running at about, I told you guys this, between 30 to 35 billion a month. Actually, probably like 32 to 35 billion a month. So we're talking about a drain of around 425 billion annually. That's not nothing. That's a serious haircut. Okay? And that might increase because we still don't have, or Trump still hasn't set up a deal with the Chinese yet. So we don't know. But that's likely to increase because I remember, what's his face, donkey face, Howard Lutnick, said that it'll be like 50 billion a month. But of course he was cheering that. Like these guys, it's like, yeah, the government's got to make money. But the way the government makes money is to take it away from the non-government. That's us. That's the economy. So 50 billion a month would be 600 billion annually of drain. You're basically talking about not cutting net transfers in half, but dropping them by like 40%. That's not good. That is not good. But for now, we have a positive environment. The government shutdown, I think, is going to end. We have a quarterly interest payment coming up on Friday. The flows are stable. That quarterly interest payment will boost the flows at least into, the mid part of next week. But that's probably the peak in the cycle. The cycles peak every quarter with these quarterly interest payments. When you combine first of the month payments, which we had a huge one on November 1st, October 29th. Oh, no, it was the 31st, right? October 31st, we had a huge first of the month payment. And then we're going to get this quarterly interest payment, which is the last one we had in August, it was 75 billion. That was 10 billion more than August 2024. So I suspect we're going to get a quarterly interest payment at least 10 billion more than what we had last November. So we're in a good, monetary environment right now. You see gold picked up, silver picked up. They're picking up on this improvement in the monetary condition. That's totally understandable. The question is, what are the flows going to look like once the government reopens? I suspect that we're going to get back to this positive trend, this year over year increase in leading flows. and that might stabilize the net flow situation, but they're still going to be negative. I mean, there's nothing you can do about the tariffs. Trump actually bessened today because Trump was saying he's going to give everybody $2,000 checks. Besson was tapping the brakes on that, saying, well, you know, that might be done through a tax cut or through tax cuts that were already passed by Congress when they passed that package. I don't know. I forget when that was, earlier this year. Look, I think the best way to do that would actually be tax cuts, but to make it a permanent tax cut. So there would be a permanent offset to the tariffs. A one-time tax cut or even a one-time check for $2,000. I think the checks, even if the checks get sent out and everybody spends that money, it could be at least temporarily a little inflation spike. And then you know what would happen. The Fed would freak out, and right away bond market would start pricing in rate hikes. I think the best way to go on this, and you know, I'm not the guy who makes policy, but the best way to go on this would be a permanent tax cut to offset the drain coming from the tariffs. That's the way to do it. I mean, you need something to offset that drain. You know, if you have the non-government now transferring money to the government, which basically goes into a black hole, what benefit is that? We, the non-government, we don't see any benefit from that. All right? So, I mean, something has to be done to offset that, but, you know, that's still out there. And like I always say, like, I look at the data, I see the trends in the data, and I'm not going to worry about this right now. I mean, right now, like I said, the monetary condition is good. It's favorable. Flows are not that bad. We're going to get the quarterly interest payment on Friday. The other thing I want to mention, and sometimes, you know, this could be very often like the best thing you can look at, which is investor sentiment. And I told you guys, if you look at the AAII weekly sentiment survey for individual investors, there's been something like 44 or 45 weeks that bearish sentiment has been above the historical average. That is a long streak of bearish sentiment, particularly if you consider the fact that the market's been going up. I mean, you know, we had this correction over the last week and a half, but I mean, the market's been making new high after new high after new high. Yet individual investors have been bearish throughout this whole entire run. 44 consecutive weeks when bearish sentiment on the part of individual investors was higher than the historical average. So for me, you know, I'm basically a contrarian the way I look at the markets anyway. For me, when I look at that, that just says to me that's going to flip. That's going to flip. I mean, we're going to get into an environment, you're going to see, it's going to come. There's going to be an environment where that bullish sentiment is going to be elevated for like 44, 45 weeks. And bearish sentiment will be below the historical average for that length of time. I mean, I think, you know, if you're looking at anything right now, that might be the key thing. Because it just seems to me like, why so bearish? And the market has just been going up. Something's going to change the perspective on the part of individual investors. And we might get something now coming out of earnings. You know, we're going into the earnings season for the third quarter. The companies will be reporting. Earnings are going to be strong. We get now, hopefully this government shutdown is over. Things get back to normal. We resume back to normal fiscal flows. And that's a positive environment. And the other thing I said last week, which I was laughing about, because it was all over the news, everywhere where they were, these articles that were trying to explain the reason for the stock market sell-off. Everybody was saying, oh, valuation. Like all of a sudden, everybody got together at the same time and decided that the market was overvalued, so they were all going to sell. I mean, you could have made that observation a year ago, maybe even farther back than that. You could have made that observation. To me, it seemed like such a specious argument, like, everybody all of a sudden in agreement that valuations are too high, so let's all sell. I mean, when I see something like that, I want to go against that. That just seems ridiculous to me. Sometimes it's so obvious that people are just fishing for any explanation, that they come up with silly things, ridiculous things. And like I always say, when you see stupidity, when you see ignorance, when you see things that are nonsensical, like, everybody got together the same day and decided that valuation was too high, so we're all going to sell. Come on, it doesn't work that way. It doesn't work that way. This game actually is a lot of fun. You could take away a lot of fun from this game, because you get to, how people, they might go to the park, or maybe when they're at the beach in the summertime or something like that, maybe they like to watch people, right? People watching. You get a kick out of that. Just watching people walk by, doing their thing. This is the same kind of thing. It's people watching. And it's a lot of fun, because you can see behavior. I mean, if you're a rational, composed, disciplined person with knowledge, with understanding, and then you're sitting back and you're watching this, or you're reading commentary, explanation, stuff like that, it's humorous. It's fun. You could take away a lot of fun from this activity. Like, people make it overly stressful on themselves. It doesn't have to be that way. It's all about calm. It's all about observation. It's all about knowledge and understanding. That's it. And so, like, I love the game. The game for me is, that's not to say there aren't times when it becomes stressful. There are. Like, if I see behavior that becomes extreme, which is so out of line with reality and with understanding, that bugs me, because that could be very disruptive, and it shouldn't be. That's coming from panicky behavior or lack of self-control, emotion, and lack of understanding, lack of knowledge. That could be destructive. And when I see that something like that stresses me out. It's not like I'm looking at my portfolio, and that's not the part that stresses me out. It's the behavior of the masses. But then there are times, like, you see things like what happened. It's like, oh, we all got together. Last Wednesday, we all got together and decided that the valuation was too high, so we're all going to sell. Like, it was one big, giant, gathering that they all said, yeah, I think this is it. Today's the day that the valuation is too... Come on. You follow what I'm saying? It's comical. Stick with the stuff that has importance, that has meaning, the things that drive actual economic trends. And like I always say, those are the flows. Anyway, it cooled off quite a bit here in Florida. We're in the 60s. I think tomorrow morning early, when I get up to go to the gym, I think it's going to be in the 40s, but it'll only last like a day. All right, folks, that's it for today. Thank you for watching my video. I appreciate it. Please like and subscribe. It helps the channel. And don't forget to go to my website, pitbulleconomics.com, and sign up for a 30-day free trial to my report, MMT Trader. Thank you. Have a great evening. Bye.